estate revolution. Then, housing prices rebounding. Is Rich Dad, Poor Dad author and millionaire Robert Kiyosaki buying? Won't you be surprised? All right, well, now's the time to buy real estate. Rich Dad, Poor Dad, Robert Kiyosaki is here to explain why. And Happy Hour just got a whole lot happier. What more restaurant chains are doing. Well, you know, you may run into some realtors at Happy Hour tonight. Today, a report that shows housing prices increasing and they're rising in markets. My next guest says now's the time to snatch up some properties, and he is very sober. Robert Kiyosaki, the author of that entire Rich Dad, Poor Dad series. His newest book is Conspiracy of the Rich. This man is a cottage industry. Robert, how's he coming back, you think?
No.
Okay, well, take care, Robert. No, so you're saying what?
We have mortgage resets coming up in the commercial sector. Plus, we have corporate debt resets coming up. So 2010, 2012 is actually a rougher period coming in right now, which will be rough in the stock market. But that said, it's very good for investors because you always want to buy low and sell high. So
wait a minute, buy low, sell high.
Yeah.
All right, but you look at it for real estate when you invest. You're looking for revenue stream, cash flow. Explain.
There's only two types of investors, cash flow or capital gains. 90% of the people invest for capital gains. They want the price of the stock to go up. They want the house to go up. Cash flow investors are different. We have to make a profit in good markets and in bad markets. So in this last market crash, I actually did much better. And now that the market's getting lower prices means cash flow is more affordable.
But if you buy a building where there are rental units, I mean, your rents have to come down, don't they, in an environment like this?
Sometimes, but that's a marketing function. If you're a bad marketer, you're not a good landlord, people move out. But if you're good, they'll stay.
Yeah, but across New York, for example, rents are being slashed dramatically.
Well, it's because it's New York.
It's because it's New York. They can only go down a little bit. You're, for example, you like Las Vegas, right?
No, I actually like Oklahoma, Texas. Nothing's changed. The reason I don't invest in New York is they're pro-tenant. California is pro-tenant. In other words, I can't evict anybody in New York or California. But in Arizona, it's only 5 days, and they're gone. So you really have
Isn't that a little Norman Rockwell moment? So you're saying that if you're going into real estate to make a killing, not the investment.
No, and what I'm saying is actually is getting much better. The next couple of years, I'm seeing deals come across my desk. For example, I was looking at a hotel that 3 years ago was for sale for $25 million. And I went to bid on it at foreclosure, and it went for $8 million. Now, somebody took a hammering on that one. I didn't bid on it. It was too high for my price. But it's a very good time, and it's going to get better. But you really have to start looking for cash flow, not capital gains.
Meanwhile, if you're a prospective tenant, you're looking to rent off of Bob, you're late one day on that payment, it's going to end ugly. That's all I'm saying. Robert Kiyosaki, thank you very much. Good seeing you.